Hello friends, greetings from Iceland, that's where I am currently. And in this video we will go over some indicators. I will show you how to use central pivot range in your trading, along with other tools like Myfxbook Outlook Indicator and also ADXVMA, Camarilla pivot points, those tools that I use as you saw in my previous videos. As I predicted earlier, we predicted that EURUSD will make another leg down. That's what it did, exactly from 8 period ADXVMA. Actually, ADXVMA of the close acted better than of the medium, so you can use whatever. You can use open close price. Right now this is of the open, but you can use also of the close. It's more or less the same. You see price rejected from the daily ADXVMA, and it was also reversing at the monthly reversal level. This pink line is Camarilla reversal level. We call it R3 or H3, high 3 or resistance 3 level. It's a reversal level in Camarilla pivot points, monthly reversal level. And you see price didn't close above, and it just should shut down, make another hyperbolic move down, and it made it moved along the trend line. As you see, it made reach it the low, breaking the ceiling. This blue line is monthly roof. This is monthly floor actually. Monthly floor. The blue line above is the ceiling, below is the floor. So it broke through the monthly floor, as you see, but it didn't reach the black breakout level. I suspect price to make another leg down and go another 100 pips to reach the breakout level here, and also the reversal level in the bottom of May Camarilla pivot points. That's my prediction for the next month, that price will make it to about 0.5. And you see we also have the bullish bias, because most of traders, retail traders, are long. As you see, blue signifies that most of traders are long, and price always moves opposite to what the most of the crowd is doing, unfortunately. And this is the proof from that. It's real data from my Myfxbook traders. Most of big traders in the world, all the retailers, many of them, they have their accounts bound to Myfxbook, and it tracks what they're doing. So most of traders are long. As most of traders are long, price drops down. Most of traders are short, price goes up. So you see now, right now, most of positions you see here, most of traders are long. So it's another confirmation that we will be moving down. We're also below the ADXVMA. But the point of this video was how to use central pivot range. We will go to the lower time frame for that, 1 hour time frame, and I will add central pivot range daily, so that you could see it. Just a second, take some time to plot it. Yeah, we'll put black color. Okay, now we have central pivot range. It's very good to do day trading using central pivot range. Like right now, we expect in a short when price pulls back to central pivot range. This is actually daily pivot. The middle line in the middle is the daily pivot, but you also have those bottom and lower and upper pivots above central pivot range, and you see prices pulling back to that. So depending on what side of the central pivot range price is, we look for either long or short. So now price is below central pivot range. It's very likely to test the pivot. You see daily pivot, and then once it's tested it's likely to push down from that area. So we look for entries at a central pivot range during the pullbacks for daily entries. You see how nicely when price was going down during the previous leg, we were looking for shorts. Look here, price was below a central pivot range here, and you see, the thinner the central pivot range, it means we will have the volatile move. You see, if both three lines of central pivot range are very thin, like together, like here, you see they are very close to each other, almost one line, it means expect the violent move either side. But it was obvious that the move will be to the downside because price was below the daily ADXVMA and also 4 hours ADXVMA. But it was tricky because it was above the weekly ADXVMA, but this candle was a signal to go short when it broke below ADXVMA for the violent move, weekly ADXVMA, so you go short. Then was another, price gave us another opportunity to go short when it pulled it back to this central pivot range, another short when it pulled it back here to this central pivot range. You see, it never closed at above, it means it couldn't break. But here it broke above central pivot range, it means no short. When price breaks above, you ignore the setup, short setup. So it was broke above. It's like this central pivot range had been violated. It means we don't look for shorts from this area once it had been violated. Then price started reversing, closed above 4 hours ADXVMA, but it was still below the weekly and daily ADXVMA, so was reversing back. We had some divergences here in this area. You also have to watch, it's good to watch divergence, resign divergence, which was telling us that price is likely to reverse. But let's look back how to trade pullbacks to central pivot range. Here you see price drop it down, pull it back to central pivot range, touched it, went down again. Same thing here, pull it back, touched it, went down again. It works very well in uptrends, like here you see went up, touched it, tested it, went up again, touched, hit it here again, central pivot range, went up again, here the same thing, tested it, went above, here went below, it means a signal that something is wrong. It didn't make another short back, but went down. Here this central pivot range had been violated, this one had been violated, and price here it tested this one, pulled it back, went down. There is another thing, such thing as missed central pivot range. Like here, price missed central pivot range, so you can do a short from the next one. When price is missing central pivot range, you can do a short from the next one. It's a violent move from very thin central pivot range here, like I told you. They predict volatility. See, it was 3 lines stacked together. See how big a move we got here. Again here, a very violent move from very thin central pivot range. Well, the bias was obviously to the upside because this was very nice, easy to trade because most of traders were short, so it was obvious that price would be going up, and price was above ADXVMA, monthly, weekly, 4 hours, and it was just pulling back to central pivot range, so it's like one could do longs here from central pivot range up, and here it was very violent move from this one. It was very thin. You see how price rapidly went up from the thin. Here it was also very thin central pivot range. You see how violent move we got from that one. So those indicators I use in my trading, central pivot range. So I'll be looking for shorts. Actually, I opened at a short position yesterday already. I went short somewhere here. So I'm already down some 50 pips. We pulled back, but maybe I will add more positions when we hit the pivot here. Maybe we don't hit, because not always price hit, but it always tests central pivot range before it makes a leg down. So most of traders are long week look for shorts. This is the video I wanted to show you how to use central pivot range. You can also use weekly central pivot range. Let's change to weekly. It acts the same way like monthly. Okay, see, price is likely to test most likely weekly central pivot range, which is rather thin. It means we expect a violent move this week, and the move most likely will be to the downside as we predicted. Well, it had been already quite violent, you see, this week, yesterday especially, because it's rather thin central pivot range, weekly one, you see. So nearly always price never misses weekly central pivot range. Some people use it as a strategy to trade weekly pivots. When we see it's very few cases when price would miss weekly central pivot range or weekly pivot. It almost always goes to test it sooner or later. You see, there was in this period, there was not a single week in this big, in 3 months, that price wouldn't touch central pivot range weekly. It always does it, you see. So if you see that price is above or below central pivot range, never tested it, you can even target it as a strategy. You see, it's always test central pivot range weekly. Like price was, for example, here above this central pivot range, went down to test it, weekly one. Same here, it was straight above, went down to test it. It acts like Fibonacci retracement, the same way. And I think it is a Fibonacci retracement in terms of calculation, 33 or 66, something like that. Very similar to Fibonacci. I don't use Fibonacci in my trading, but I use central pivot range. Now you know how to use it. It tells you the bias and the direction, prices below or above it. All the best to you guys in your trading.